Hey everybody, it's Pete. Good morning and welcome to a new episode of Stocks for Breakfast. Today we're going to talk about probably one of the most unsexy parts of trading, but in my opinion is one of the three core fundamentals of actually getting to the other side and being profitable. Look, we talk about it all the time. You did not open a trading account to be a better chart reader. You opened you opened your trading account to be a profitable trader. You want to see your account grow week after week, month after month, and in my world, it's usually month after month. Um, what I'm talking about today is learning how to not lose money, learning how to keep yourself out of harm's way in the most consistent way so that you gain experience. This is one of the things that I think is very misunderstood by newer traders, or quite honestly, even by experienced traders who, and I say experienced in air quotes, experienced traders who have been trading for a while, but still aren't making a dime. I know I was like that probably the first 3 to 6 months when I was first started trading, but it was a little different market back then. Um, if you're not seeing your account grow, if it's not going up month after month after month after month, there's something fundamentally missing in what you're doing because you could read every chart on the planet, you could have every indicator on the planet, you could know every single thing about charting. If your account's not going up, there's something you're missing. And generally speaking, it means that you don't understand when not to trade. And I bring this up in a very time relevant way because this current market, when I'm filming this video actually right now, which is just about less than a week from the presidential election in 2020, the markets are gripped right now by the pandemic, the pandemic in general, everybody going stark crazy, right? The new global lockdowns, the hope of a new stimulus package, which is now on the table, off the table, earnings season. So there's a lot going on right now. And you know, obviously the election, right? There's circumstances in the market right now where there's a lot of indecision. However, if you understand how to read the tape, if you think like a trader, there is money to be made right now, but you need criteria. You need criteria that tells you that right now, in the time frame that you trade, there's an opportunity. One thing that I see, especially for newer members of the boot camp or members who come in who've been there and or let's say they're experienced, they have a strategy that they like, they have a strategy that they've been using, they trade certain types of stocks that maybe aren't exactly what we trade in the boot camp, which, by the way, just to give you clarity on what that is, we trade market leaders. I trade stocks with volume, I trade stocks with volatility, I trade stocks that move with the market, which is a proven strategy for trading going back to the beginning of Wall Street. You'll find it very hard to find popular trading books which have stood the test of time that don't talk about trading the market leaders. William O'Neill, Jesse Livermore, Gerald Loeb, everybody that you could possibly read that has been a trader. Look at all the market wizards books of people that talk about trading stocks. They're all talking about trading the market wizards. So if you're watching this right now and you're not trading the market leaders and the strongest groups and the strongest sectors and the strongest industries and paying attention to sector rotation, which stocks are strong, which stocks are weak, which stocks are obvious right now, which stocks, and here's a big thing, which stocks should we be pounding with confidence right now because they're super obvious and we should be ignoring anything else. You'd be surprised at how many people come into the boot camp and they're continuing to trade stocks that are not obvious, are stuck in the middle of a range, are now going down with consistency where maybe 2 months ago they were easy. And I'm going to use Tesla as the shining example of that. And they're continuing to trade them, hoping that the market and that stock specifically turns around. Because we're talking a little bit more about stock specific ideas right now. You need to shake yourself up with a cold bucket of water if what you're doing right now is not working and you need criteria. First, you need to be honest with yourself. If what you're doing right now is not working, which I'm not telling you that, your trading account is telling you that, you need to do something different. So you need criteria. You need minimum criteria that tells you right now there's something to do. Whether it's a day trade that you plan on holding for, and again, if you're not day trading, don't worry, I'm going to expand this out a little bit. If you're day trading and you plan on holding a trade for an hour If you're swing trading and planning on holding a trade for 3 to 5 days, if you're position trading and looking to hold the stock for 3 months, maybe from one quarter to the next, you need criteria. And if you don't have that criteria, you need it immediately, whether it's the opening price, whether it's changed from yesterday's close, whether it's the first print on Monday, it doesn't make a difference. You need criteria. You need, and we talk about this all the time, and this is what we specialize in the boot camp, which is building an argument, building an argument, building an argument. One candle just turned is not an argument. That's the start of an argument. So what I'm trying to get across here is, as the market's unfolding within the time frame, again, if you have a full-time job or if you're a day trader, you need criteria. And again, I'm going to keep using Tesla as an example right now, where a lot of people love the stock, and I understand why. I mean, it was parabolic for a long time, but now it's slumbering to trading down, and there's some strong-willed people continuing to trade it as if it was doing what it did in March, really the last couple of years, honestly. It's not doing that anymore. And I'm just using this as a very visual, recognizable example, because now I'm going to ask you, go into the stocks you're trading. Are they market leaders? Are the stocks you're allocating capital to consistently obvious? Is there order flow? Are you looking at the tape and saying, if I accept this risk, is probability of profit there? Is there a likelihood, a strong likelihood that my profit target is going to be hit versus my stop loss? Am I trading stocks that if the market moves, they move with the market, which, by the way, is much, much easier trading when you could learn how to read the market and all of that money's on the same page and you're trading stocks moving with the market? Are you adjusting how you look at the market and saying, okay, the market is in an uptrend, now the market's in a potential change of trend, and the market broke back up, so it wasn't a change of trend. Then the market goes into what we call distribution, and there's certain types of price action for distribution, and now it finally rolls over. Do you start short selling the stock? Do you stay in cash? Do you go to look at a different stock? And we'll use these solar stocks right now as a shining example of that as well. If you follow what we do in the boot camp, which is a heavy dose of sector rotation, following individual groups, being in the right stocks at the right time, which you need to understand how to scan for ideas, and you start to pay attention in your game plan, you can trade stocks like JKS and Run and ENPH. Even if it's only for 2 months, the money was flowing into that. Order flow was obvious in that sector and in that industry group. And now the tape has changed. The same thing with DocuSign. DocuSign was super obvious, and Wayfair, stocks that had obvious order flow, a certain way of reading the tape, which we teach in the boot camp. And then when the tape changes, you either pull back, scale back, or start to look for another trade. That's what real trading is. Real trading is not fighting what's not working. Real trading is being on top of your game and constantly understanding that sometimes there's tough situations and you need to scale back. Like right now, this is a tough market right now. You really need to be on top of your game. You need to scale back your share size. You need to work extra hard to find the right stocks that are moving. That's what real trading is. So if you're watching this now and you've watched it all the way to the end, I know you have a passion, a burning desire to do this. What I'm going to ask you to do is start to have criteria. If you're in the boot camp, we talk about the criteria every day, and I reiterate it every single game plan and during the day. Those that are struggling, whether in the boot camp or not in the boot camp, you're probably doing what I did when I first started trading, which is you're still trying to prove yourself right instead of just listening to the market and having structure for letting the market tell you what to do. And then we piggyback on that order flow, which is where the easier trades are. And again, I'll use Tesla as an example. When it was obvious, the money was easy. When the solar stocks were obvious, it was easy. When DocuSign was obvious, it was easy. When the tape changed, you'll see it. And even if you don't understand tape reading, you'll start making less money. And that is the first sign when you need to pay attention. When the same stock that you were making consistent money in starts to get harder to make money in, the very first thing you need to do is scale back your share size because something changed. But when you take it to the next level and you understand how to read the tape in multiple time frames, from the 6-month chart to the quarterly chart to the monthly, weekly, and all the way down, you start to notice that before you start to lose money. You start to say, wow, there's a lot of melted candles, or in our terminology, there's inside candles or the stocks went well offered. It's not the same anymore. That same beautiful green uptrend that we were looking at, one candle well bid, another candle well bid, is now a melted candle or an inside candle, or worse, well offered, but you're still trading it the same way. That's where having criteria makes trading repeatable, reliable, predictable, but then you still have to follow it. So to recap this whole thing, you need structure. You need to understand that we have an edge, and an edge means you should make money over time, provided you trade that edge flawlessly, which also implies that there's going to be some losing trades. And if you're in the boot camp, we teach that that is a business expense. It's expected. You can't get mad when you have losses or disappointed when you have losses, because you're running a trading business. It's an expense, no different than if you had to rent an office, if you had a different kind of business. So once you start to understand the mental part of this, the next step is to actually trading, learning to recognize different situations, when you should pull back, when it's obvious, and how you should trade those two different situations. Once you understand that and you learn to minimize your mistakes, you learn to stay away from less than obvious situations, the next part is what I promise everybody. Within 30 days, if you ask a lot of questions and you get involved and you do the training and you study, the next part is actually the best part. We're talking about holding good trades longer. And that's really where trading becomes exciting. So if you're watching this now, and again, if you watched it all the way to the end, I know you can do this. You just need to really put on your overalls and understand you need structure. You need something that's repeatable. And whether you do it the way I do it or not, that's completely up to you. I'd love to see you in the boot camp. I'd love to have you in my community. But if you're doing it on your own, turn the internet off, turn the TV off, spend as much time as you need to in front of a notepad and write down what a great trade looks like to you. And you'll start to see that. You'll notice there's nothing going on based on what I see on that notepad, and you start to stay back. And then when something is obvious, you take the next step back and you're like, all right, now it's time for me to get involved. That's what real trading is. Have a great day.